Now, here's another one. Out of left field, it's been reported that Elon, who is actually a co-founder of PayPal, is trying to make X into the ultimate PayPal competitor. So it's been leaked that that is what Elon is trying to do. You know, he talks about making X, formerly, aka Twitter. He's trying to make that into this gigantic payment app to compete with the likes of PayPal, which means he's also going to be dabbing into crypto because PayPal right now is very, very, they have a very ambitious goal to kind of move themselves towards maybe all digital currency one day as they release their stable coin, which is a big deal. You don't see a lot of private companies just come out of the stable coin, especially in the US. So obviously they have some big ambitions, right? And they already allow crypto trading. They also allow you to withdraw your crypto, which is nice. When they first introduced buying and selling, they didn't allow that, but they do now. But still, I don't trust PayPal. I've always said this. I don't trust PayPal. They look like they're a bank. They look like they operate like a bank, but they don't follow banking rules, so they could just lock you out and all this stuff. But anyways, so this leak is interesting because Elon has been very quiet on the crypto front, right? Even with Doge, very, 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 very little has been said about Doge for how many years now? Probably a couple years. So is he secretly planning something huge? Like a massive update with a crypto wallet, with maybe a stable coin trading within this wallet, right? Maybe he's planning something absolutely huge that none of us, none of us imagined, has anticipated. I don't know. That could be coming. Right? I think that's pretty interesting. That's why chaos could be coming from Elon as well. He certainly has the power to drive markets. That's for sure. There's other reasons why this bull market is very different than previous bull market. What we saw in 2017, which was pretty crazy. 2021 was pretty crazy. This author makes an argument that 2025 will be even crazier. And I agree, because I've been telling you guys, the fundamentals of Bitcoin have been getting better and better and better, and they have never been stronger than now. Number one, hash rate. Hash rate is at an all-time high. Okay, this is the miners basically trying to find the next Bitcoins, and they're securing the network by doing so. So the hash rate is at an all-time high, and it has never done this before in a crypto winter or bear market. That's very different than previous cycles, right? What does that mean? That means the miners are not selling. Previous cycles, miners did have to sell. Sometimes they had to sell a lot. This time around, there's no miner selling anything, okay? They are hoarding everything, holding everything that they're mining. That's why there's a supply shock. Okay, there's going to be a huge supply shock when the masses come in and then they realize there's not enough Bitcoins, right? And that's when we're going to get that supply shock and price will go parabolic once again. But number one, hash rate is an all-time high, despite the fact we're not in a parabolic bull run right now. Supply suffocation, same thing. Exchanges are losing their Bitcoin reserves at an alarming rate, okay? We are now back to 2017 levels in terms of exchange reserves. And they keep on going down. There's more and more people that keep buying, DCAing, and there's new people coming in buying and DCAing. That's causing the supply to go down. Again, supply shock. It's going to come. Okay? And then lastly, the Great Wall Street accumulation, unlike previous cycles, we've never, ever, ever, ever had huge accumulation by the institutions, such huge interest from the likes of BlackRock and Fidelity and Vanguard, like the biggest asset managers on earth with trillions on their balance sheet. We never, ever, ever had this kind of interest. Guess what that's going to do? Cause a supply shock, right? So all these things... measure the fundamentals, and also I've said this before, time and time again. What it comes down to is supply versus demand. We got this big ruling over the SEC, right? First step, SEC lost. Now they can't use the same excuses they have used before, which is we can't have a spot Bitcoin ETF because there's too much fraud and manipulation. We need these fund managers to prove that there aren't these things, which is virtually impossible because even with, say, gold, okay, or the futures market, or any commodities, or anything, right, there is going to always be fraud and manipulation, especially when it comes to something that's traded worldwide, right? Bitcoin is not just a U.S. thing. Just like gold is not a U.S. thing. Silver is not a U.S. thing, right? There's a lot of countries, a lot of people buying and trading. So these arguments were never valid to begin with. It was just an excuse for the SEC to say, yeah, this, let's give them something vague and broad because they can never disprove it, right? So we never have to approve a Bitcoin spot ETF. Well, the court's like, no, you can't do that, SEC. Okay, Gary Gensler, you can't just make up the rules and just pretend like that's just the way it is, right? So the court shot back at the SEC saying you can't use these broad, generic, vague excuses for not approving a Bitcoin spot ETF, right? So now, if they do want to deny, they have to give some new reasons, some really good reasons. And here's the thing. Because of this, whatever reasons they give, now these fund managers have ammunition. They could just go ahead and sue the SEC and say those are invalid, right? I mean, this sets the precedent for a lot of lawsuits against the SEC because they've been taking a lot of L's, okay? And they're probably going to take more L's. Okay, so this is good. This is very, very good. You know why? Because the big events that I've been referring to, there's 7 other ETFs besides Grayscale. Okay, and the first deadlines are coming. In fact, this week, we have 6 different ETFs pending right now with the SEC. Okay, so tomorrow is a huge deadline. Because of this ruling, because Grayscale won this huge battle against the SEC, okay, this pretty much paves way and makes it 100% certain that we will get a Bitcoin spot ETF by the end of next year. However, estimates are now at 75% for approval by the end of this year. Okay, because of this, because Grayscale won against the SEC, the judge looking over this said the SEC did not provide sufficient evidence that a spot Bitcoin ETF would behave any different than a future-based ETF, okay, and that the lame excuse that the SEC gave about, well, there's fraud and manipulation. Again, it applies to both. It doesn't apply to one. So the SEC really doesn't have anything else to say. They can't nitpick on anything anymore. And there are small nitpicks. For example, not having a surveillance partner. All these fund companies just immediately add Coinbase. You want a surveillance partner? Okay, well, you choose Coinbase, right? You want a custodian? Okay, we'll choose Coinbase. Right, so there's really nothing that SEC can do anymore unless they just come out with some other weird, thing. But then they're probably going to be sued, and then, they're going to get into it and lose again, right? So, I don't know. Because there's a 75% chance, of course, this is just made up by analysts. It's not like any official measurement or anything, but if, let's just go along with this, if there's a 75% chance that Bitcoin ETF will be approved by the end of the year, tomorrow, September 1st, with those 6 pending, odds can't be that bad. There's not that many deadlines by the end of this year. There's one tomorrow, and I believe the next one is in November. Okay, so it's either tomorrow or November, right? And if one gets approved, they're all going to get approved. There's no reason why They wouldn't, because they all basically do the same thing. Also, those of you guys that's measuring or watching the presidential candidates, Vivek, he recently commented on the Grayscale's victory, and basically he's like, this is good. This is good. We want to keep things in-house. Why do we want all these ETF providers to go overseas to offer them? No, we want some in the United States, right? It makes sense. It makes sense. This is why everyone wants Gary Gensler out, because he's simply driving innovation away. He's driving all these great developers and leaders and projects overseas. Why? Keep them in-house. They are the future. Web3 is definitely the future. So why would you not want the brightest and the latest tech to stay within the United States, right? Why drive into Singapore or Hong Kong or I don't know, UK, right? Keep them in-house. But in the meantime, of course, what should you do? Wait until October? No, you should just continue to do what you're doing, which is accumulating and DCAing, right? There's still articles like this that gets posted. If you invested $10,000 in Bitcoin when it crashed in 2015, you'll be able to buy a Manhattan apartment today, because that $10,000 would be over $1 million today. You hear about these headlines all the time, right? And people ignore it because of the fact that it's like, okay, yeah, it's not 2015, it's 2023. So what, But that's the thing. You fast forward to 2030, right? You're going to see headlines like this. Had you invested $10,000 in Bitcoin when it crashed in 2023, right, you'll be able to buy this today. It'll be the same story. It never changes, right? That's why when you invest in Bitcoin, you can't measure performance just like based on a few months or even a year, because we know the 4-year cycles, there will be bad years, right? But if you look at it from a long-term perspective, 5 years, 7 years, 10 years, you'll always win in a big way. By 2030, which is 2 halving events from now, Bitcoin could be at $1 million, right? Think about that. So that's why nothing really changes, right? If you're a Bitcoiner or you believe or you're trying to get involved, right? Just know that you want to accumulate long term. You want to focus on long-term investing, not short-term investing. Because if you do short-term investing, you're probably going to lose.